Hello, folks, and welcome back to the show, LiveWire. And what a weekend! Incredibly eventful. A lot of volatility and implications for various markets, with one of the main stories today being crude oil. That one really breaking out with the conflicts and strikes on Iran. So, a lot of implications and a lot of things to discuss as we continue on the 4 year journey here with Bitcoin as well as stocks. So, Monty, good morning. I also see a lot of familiar faces in the chat. So, welcome back, you guys. It's always a pleasure to hear from you. But what's going on, Monty?
Yeah, glad to have everyone here with us today. And got to give you your roses, CJ. I mean, you've been talking about crude oil, particularly WTI, for quite some time and the possibility of a breakout. And we definitely got that today on the back of this weekend's geopolitical uncertainty. So now that we've gotten that move, I want to get your thoughts on what's next for crude oil from here. But also, we can talk about Bitcoin. Silver looks interesting today as well, looking a little bit weak. But Bitcoin's showing some signs of strength. I want to talk about that, talk about how people are positioned and perhaps what's feeding into this strength and if it can continue into the future. So excited to dive into things. I see Mike wants us to hit silver and Bitcoin. No problem, Mike. We can definitely hit both of those before our time is up.
Yeah, well, our title today is the end of the business cycle. And I'm not saying that has to be implied, today. Obviously, I think that the response in terms of stocks and Bitcoin and risk assets collectively to this conflict, I think is quite bullish. And we know from the midterm seasonality that stocks usually have a nice rally up until like late March. And even Bitcoin has seen historic rallies in the midterm election year in finding a bottom in late February and going up for the first couple of years or the first couple of weeks of March. Let me bring up the chart so I can be a little bit more concise with you guys. Just got a lot of stuff. Very hectic day today. All right, so taking a look at Bitcoin to start, I'd like to start by going back to 2022 because it's kind of eerie. We talk about Bitcoin being in the 4 year cycle, a part of this 4 year journey. And the previous attack that we saw was February 28th, only 4 days apart from the Ukraine invasion in February 24th. Nearly exactly 4 years ago. And what we can see is that price had an initial sell-off during the invasion. I remember this evening watching the news, but then price closed green. And a lot of folks were saying, they were providing the data about, buy the invasion, which usually does work out short term. And, that's kind of working out today as well. But what we can see is that we had a bottom in early February to mid-February, and then price rallied and was able to make a little bit of a new high in late March, before then, of course, resuming the bear market and heading to those lower levels. Some of the lower levels we talk about are, roughly $35,000 to $40,000 Bitcoin. But as of now, looking at IBIT, it looks like, what I will say is Bitcoin looks the best today as it has in many weeks. We have horrible sentiment, really bearish macro conditions with oil going up. The implications of inflation are very interesting there. But maybe we actually start to hit some of these gap fill targets to the upside at roughly 72 to 75,000. We have, or at least we are looking to close above previous resistance. And most importantly, in my opinion, above the 20-day moving average. That's a key level to watch for. But there's a lot to talk about. I still got to get a couple things organized. But I think Bitcoin, if I just, it's following kind of what it's always done here. I'm looking for the average historic midterm chart. I'll pull it up in just a second for Bitcoin. But despite the conflict, Bitcoin's still kind of just doing what it's always done in the midterm year, which is see a nice rally at the start of March and, maybe a peak towards the end of March. So we're going to keep following that fractal and, it keeps working for the foreseeable future.
Yeah, like you said, it is pretty eerie how similar this year's price action has been to what we saw in the previous bear market cycle. And I think that we can definitely draw a lot of info from what we saw last time around. I think that, seeing a brief reaction rally here isn't out of the realm of possibility, especially with the price action that we're seeing today. And, just taking a look at the chart here again, looking at Bitcoin, I have this red line highlighted here. This red line is the short-term holder cost basis. So currently sitting at about 86,000. That's the average price of Bitcoin that short-term holders have paid for their Bitcoin. So, some may sell as we approach this moving average here and just cut their losses, but some may try and hold on and regain this ground. And I'm really glad CJ brought up IBIT, because I did want to talk about IBIT today, because I really like the upside potential for IBIT given the gaps we have to the upside here, particularly right around the $45 to the $47 level. We have this gap that I think looks like it wants to get filled. And I think if we do see, Bitcoin grind higher, that this is definitely a plausible target by possibly end of a week. So, what we're seeing today out of Bitcoin is very encouraging. The Q's relatively flat today. So Bitcoin is showing signs of independent strength. Obviously, we're seeing other things like crude oil perform well. But one thing that I did want to mention today that I think is looking really good and has historically performed well in midterm election cycle years is the dollar. Finally getting that breakout that we've been waiting for after consolidating at this moving average for about a week. Now today we're grinding higher, obviously on the back of this geopolitical uncertainty that unfolded over the weekend, but nonetheless, you can see it taking effect today. And I think that based on a midterm election cycle year, CJ's highlighted this a numerous amount of times, but the DXY tends to do well in midterm election cycle years. And I think that this is a solid investment at this point in time. We have this very large bullish candle indicative of a breakout, and I like a move up to at least the 99 level. We'll probably see some resistance at 100, but I do think that with this geopolitical uncertainty, we could plausibly break above those levels and head back up towards the previous swing highs at around 102. So, some interesting stuff going on in not just Bitcoin, but in the greater equity markets as well. And with the dollar moving up, I really like how it's postured here today, breaking above that 20-period smooth moving average, and putting in some nice bullish candles. So looking to these upside targets for the DXY, I think they're not out of the realm of possibility. But I think that, this is something that will perform well over the year, whereas Bitcoin right now is kind of in a mini bubble. And, we could see a move back up towards the short-term holder cost basis, but more than likely, we'll probably sell off a little bit before then. But, what we've seen historically, like CJ points out, historically during the month of March and late February, we tend to get a little bit of positive price action in Bitcoin, and this is fitting that criterion to the T. So we're seeing that sign of interim relief rallies. And last thing I'll say is, if we take a look at some of the positioning data in the forms of liquidation data, it's pretty resounding how many people tried to short this market last night and essentially just got blown out. So you can see here that around 66 to 68,000, we had about $400 million worth of notional value pile in the last 24 hours. And that all was essentially wiped away by this positive move to the upside. So you can see that there were some people getting short even at lower levels here. Those were all liquidated, but even the ones that were closer to price got liquidated as well. And I think that right now, just based on the technical posture of Bitcoin and based on the sentiment and also geopolitical overhang, I think that right now is not a good time to be shorting Bitcoin. So, some people are still trying to take a shot shorting this market. I think that you're better off waiting until we get this relief rally that we typically see from Bitcoin during midterm election cycle years, which I think we're starting to see the beginning of right now. And then perhaps shorting the market once we start to break down again. So just be careful if you're trying to short the market here, because I think the potential for an interim relief rally is actually very strong.
Yeah, I bought a little IBIT this morning just as a short-term trade, not as like an investment or anything. I have the charts now, so I want to bring some of those back up.
Cool.
So Monty, just kind of finishing your point here on the dollar, I want to share a couple things from, this is a weekly report from a few weeks ago. And we were looking at, Bitcoin's average returns for midterm years. This is the DXY year to date, compared with the 3 prior midterm years. So 2014, 2018, and 2022. This is the composite average of those previous 3 midterm years. We have a lot of similarities in terms of the macro environment as well. Same administration as 2018. And the price action, is surprising to see, but we have to kind of acknowledge the fact that this is kind of just what we always see in midterm years. Not always, but we have a high likelihood of seeing in midterm years, is the dollar continuing to trend for, about 300 days into the year. When we look at Bitcoin and compare it and its previous price action in midterm years, this is just kind of following what it's always done. We see this rally take place, and based on the prior 3 rallies, it does have a tendency to top out on March 3rd, obviously, which is tomorrow. But we've been following this correlation very, very tightly. And I would look for, price to kind of rally and challenge some of these average historic levels, because it's just what we have seen in the past. Moving on to more broader equities, I have another chart here of hang on one sec. Okay. So this is the same type of chart, right? But this is the Dow in terms of the midterm election years. As you can see, going through this top right here, this first half of the year top doesn't usually come in until about April 20th. We have a local, top usually coming in late March. This is when usually risk assets like the NASDAQ peak, as well as Bitcoin. And then you see that kind of rotation of capital to stuff like the Dow Jones Industrial. The Dow Jones and the S&P historically on average go up to make this higher high in late April, whereas risk assets usually kind of peak out in, earlier to mid-March, and then come up and historically make that lower high. So, maybe we have a nice little window here for a couple weeks for a rally in both, the Dow Jones as well as, Bitcoin and some of these other risk assets. That's just, basing on what we've seen historically. And I mean, I know this time feels different because we have such interesting events going on that are really unprecedented. But, if we just kind of ignore all the news and everything that's going on and just focus on the technicals as well as our historical correlations, it's kind of just like business as usual. So I also have another last thing, and then I'll pass it back, was a chart in terms of the midterm years in regards to crude. And this really hits on the main topic of today's point, which is, the end of the business cycle. Every business cycle, for the most part, ends with crude oil rallying quite a bit. It also usually ends with the U.S. dollar rallying quite a bit. The 3 things that Druckenmiller always talked about in terms of the cocktail were crude oil going up, the U.S. dollar going up, and the 10-year going up. And when you see all 3 of those things, increasing into a very hot economy, which I think is what we've got right now, it foreshadows maybe that average pullback that we see in stocks. We know in the midterm election years, we have an average pullback in stocks of about 18% before a high likelihood of seeing a rally into the end of the year from October to December. Crude oil is basically the inverse of that. Same with the US dollar, where traditionally, in the midterm years, at least the previous ones, we've seen pretty significant rallies for the first, 2 to 3 quarters of the year before declining in the fourth quarter. So, these are the averages, and this is just what we see historically. I'm not making any bold predictions. I'm just saying this is kind of the path that we've seen before. So it makes sense to kind of travel down it again. At least that's what we're doing so far.
Yeah, absolutely. And we have a good question from Phoenix that I think ties in with what you're talking about there. Good to see you again, Phoenix. He says, are you looking for a run up to the down before a downtrend to the 200-week moving average on Bitcoin? Yes, essentially that's what we've seen from historic midterm election cycle years. Is during the first week of March, you get a brief run up, nothing too extreme, before seeing price give back its positive gains and then going down to make lower lows. I think CJ's example of what we saw in 2022 is kind of spot on there for what we could see here. We could see a couple weeks here of positive price action before we get some negative price action. Could see those gaps fill an I bit to the upside. So I think that, that 200-week moving average is still on the table in terms of like this being a midterm election cycle year. We typically see a little bit of positive price action at the beginning of March, and then towards the end of the year, towards the time that CJ was talking about when oil starts to give back, that's when we start to see Bitcoin really start to see some speculation. So I think that the 200-week moving average is still very much a target that is alive. But I think in the interim here, we need to start looking to the upside, because I think that the gaps in IBIT plus the geopolitical uncertainty are feeding into what could be some more positive price action. So I like what I'm seeing here. And on that note, I did want to just talk about Riot, because, CJ, if you're a member of our community, CJ published a really nice report on Riot and their fundamental diversification. But really, it kind of reignited my interest in Riot. Just looking at this one from a fundamental perspective, it's got a lot going for it. Being both a benefactor of the Bitcoin trade and the AI trade. So looking at Riot here today, trading at about 1670, nice bounce from the moving average here. And I think that we can start to look towards these upside targets of about 1920. That's what I would like to see hit. And I'd like to see us break above this level in the interim and possibly come up and retest the highs here. I think that is a possibility in the next couple of weeks if Bitcoin continues to grind higher, like we've seen during historic midterm election cycle years. That first week of March kind of floating higher. I think that we could see stocks like Riot perform very well. And then, even if Bitcoin kind of stagnates a little bit, I still like Riot to perform to the upside here. Like CJ pointed out in his report of Riot, their diversification into the AI space, I think, has been a tremendous factor in positive price action going forward. And a large reason why it looks so different than if you look at Mara. Mara is coming off the lows here, and Riot is postured in a much better technical position, and I think is set to outperform to the upside. Although today it is, underperforming relative to some of the more oversold crypto-related equities, I still think what we're seeing from Riot is very encouraging and has the potential to come up and test this level of 1930, and then ultimately come up to test the level of $24. So, that's what I'm seeing in the interim, and I think that those are targets that could be hit in the short term here. But, nonetheless, I think that we just need to stick to the plan, stick to the midterm election cycle year. Yeah, we might see a little bit of positive performance in the beginning of March, but even if you miss that, I think the most important buying opportunity is going to be the one that comes later in the year. So as long as you have capital to deploy around September or October, I think that you can finish this trading year quite well. And like Mike points out, Riot does have earnings today, which will be interesting to see how they perform. I expect them to actually, get a little bit of a boost from earnings, but we shall see. So, CJ, any thoughts on Riot? I know you published a really great report on it, but would love to get your thoughts.
Yeah, one of, I guess, my missions for not only myself, but like the research for our community is I want to do a very comprehensive dive into all of these various Bitcoin miners, a lot of the infrastructure and energy plays, because if we do have optimal buying opportunities come in October or whenever those might be, I want to find the strongest asset within that Bitcoin ecosystem from a risk adjusted return perspective, not necessarily the one that's going to go up the most in terms of percentage points, but the one that is capitalized the strongest, the one that has the most potential for earnings growth, has strong proven earnings, a diversified balance sheet through AI cloud infrastructure contracts, as well as just mining. Based on my research so far, it's iron by a mile. So we will see. I'll keep going into that more. But I do want to give you guys a preview of some of that research in case maybe you're thinking about joining the community. But this is something that I published last week and has to do with a fundamental overview of Riot. And essentially, I think the most important thing to conclude, as well as like just cycle timing, is the mining economics. And if we're talking about Riot moving to becoming not only just a Bitcoin miner, but an AI infrastructure leasing company, then that diversifies their revenue clearly. But how much does it diversify the revenue is an interesting question to consider. In terms of the earnings after expenses, or the EBITDA potential, at 100 to 120K, Riot can make about from 100 to 120K Bitcoin, Riot can make about $280 million. Very volatile, right? Obviously, with the price of, mining, it costs $89,000 to make a Bitcoin right now. That's not economical for the Bitcoin miners like Riot, Iron, Cypher, guys like that. But with the AI infrastructure leasing, they can make tens of millions of dollars at 500 megawatts. But even at the most optimistic of expectations, let's say 2 gigawatt, they're only going to make about $100 million in revenue. Compared that with 280 million of BTC in the potential next cycle. If we hit levels like 200K or even 250K, Riot could hit $1 billion in revenue from Bitcoin mining alone. So I think the takeaway from all of this is that, yes, it is very bullish that they're able to diversify their energy infrastructure, but mining, or I guess I should say AI leasing infrastructure, is not a replacement for Bitcoin mining. It is a supplement for when Bitcoin mining becomes no longer economical in these volatile bear markets. So that's kind of the takeaway from Riot. Obviously Riot's at about $6 billion in market cap. Iron's at about $13 billion because it's, ahead in terms of revenue and infrastructure and things like that. But I think those assets are very interesting to take a look at. And we will be providing, more research on that on a weekly basis for you guys. So we see NASDAQ turned green. Yeah, I guess the title of this show is outdated now. So.
Yeah, I mean, I think that a lot of people were looking to the downside today because of the geopolitical uncertainty. And I think that the positioning data is reflective of the fact that lots of people are looking to the downside right now. But the fact of the matter remains that during the month of March, we tend to see a little bit of a reaction rally, at least during the first week here. And, one thing that's really encouraging too is seeing Bitcoin outperform the equity market. That's something we haven't really seen in quite some time, right? All throughout 2025, the story was the equity market's making new all-time highs while Bitcoin struggles and makes new lows. So, now that we're seeing kind of the opposite happen, and we're seeing really positive Bitcoin price action into a relatively neutral equity market, I think that's a really encouraging sign and feeds into that kind of cyclical nature of Bitcoin and the midterm election cycle price action that we expect. So, not too surprised to see Bitcoin showing a nice bullish engulfing candle, like AJ points out here. Very nice bullish engulfing candle. I think that has the potential to drive price higher. And with the gaps on IBIT to the upside, I think that, the interim is actually looking pretty good for Bitcoin. So, yeah, that's good. But getting back to Riot, I think that, a lot of times you might worry when a company makes a big pivot in terms of their fundamental approach to making money. But this was such a natural transition for Riot. I think it makes perfect sense. And I think that you could see other crypto miners follow suit, companies like Mara. But, it is just such a natural fit. I mean, they have so much processing power. Leasing out 500 megawatts is not that much. And like you said, right now, mining for Bitcoin in itself isn't economical. But because of that diversification into AI, I still think we could see some positive price action in Riot and move up to those higher levels. So, yeah, like Mike says, Riot looks good. I think, if we see IBIT fill those targets to the upside, I think that Riot really rips the upside. So I like the upside potential there for Riot in the interim.
Yeah, it's always tricky with earnings, but I think if we're just looking at the overall macro trend and its correlation to Bitcoin, things look, Bitcoin looks better now today than it has in the last 2 months. I will say that with a lot of conviction. So, all right, let's take on the beast, Monty Silver.
Yeah, I was waiting for this.
There was not So COMEX did deliver. The physical delivery did occur on the 27th. No problems there, because there's some skepticism behind that. But what do you make of the kind of decoupling or relative weakness? I see silver's down about 6%, whereas equities still a little bit red. But what do you make of that relative underperformance?
Yeah, I think that's really interesting. I mean, silver obviously has been an outperformer to the upside for quite some time. And I think if we take a look at the chart here, with those great moves to the upside comes the possibility of sharper moves to the downside. That's just the nature of the beast that is silver. But if we take a look at the chart here, you can see that, today, big decoupling from traditional equity markets, from Bitcoin. And I think what happened here is we just got a bit too diverged from the moving average. And there's still a lot of skepticism right now because of this massive correction we had back here. But, today we are seeing a bearish engulfing candle at the top of what is a minor uptrend here. And I think we see a pullback down towards the moving average before we climb higher. Silver has been a really interesting asset all throughout 2025. Basically any of these opportunities to buy in have led to like any real breakout and pullback have just led to continuation. You can see it here. You can see it here. Even like this pullback, we did get a nice bounce. We did diverge beyond the 20-day smooth moving average, but as you can see, it bounced back up. But I think that what we're seeing here from silver is just a technical lack of volume. Back here, you can see that the volume was more than twice of what we are seeing in recent days here. So we're having a lack of volume, a lack of buy pressure coming in from the spot market. And I think that is contributing to the weakness that we're seeing in silver. So, what we need to see is levels of speculation come back to what we saw in 2025 and see high volume for silver. Right now, the volume is very low. There's low spot pressure to buy. And also the large specs are max long. So you got to ask yourself, what's it going to take for silver to go higher if we have large specs max long? Retail is also getting pretty long in silver. So you have those two things going on. And that leads to the question, what's it going to take to drive silver higher if we have large specs and retail essentially max long at these levels? What catalyst is going to drive price higher? Most often you get a move down, you see that positioning data change a bit, and then price comes back up. So we might see that, but I would love to get your thoughts on silver as well.
Yeah, I want to just ignore everything and just go from a pure CMT perspective on silver, because this was one of the first charting patterns I ever learned back in 2017 and 2018 after a parabolic run on Bitcoin, and that is the descending triangle. So I'm not saying it has to, fall in there today. I'm just saying this is something I would be very cautious for, if I was looking for, moves to the upside. We do have the CCI pivoting lower after, this previous resistance level. At least as of today, it's acting as resistance as well, with a little bit of a deviation from that 20-day moving average. Very similar thing going on with the stochastic as well. But what I would be concerned about from a bullish perspective is being unable to create a new high after these particular resistance levels. If the price falls down back into this channel and starts creating lower highs among a series of on this consistent support level, then that ultimately lends price into a descending triangle, where a lot of times you see a breakdown from that level. There are some negations of this pattern though, right? Like even if we go down here, but if we start going up and create a pivot higher, that would be a very bullish sign. But we're not quite there yet. So I think silver's in a little bit of trouble if it falls into this descending triangle, because it needs to make a new high here. After such a parabolic run and then kind of a break of the parabolic trend, this is a thing that you can see very oftentimes, especially when other risk assets are rallying and silver's decoupling to the downside, which is just traditionally not what you would want to see. So be careful of that descending triangle. If we make new highs above yesterday's high, that idea is completely negated, and maybe we can have a better chance of making new highs in silver. But this is a pattern that I've seen play out many times, and I just can't necessarily ignore it because of that descending triangle formation. It comes, and the ascending triangle formation, like it comes back and gets you. So
Yeah,
that's what I have to say about that.
Yeah, and I think that technical formation would make sense with diminishing volume as well. You kind of get less volatility as you approach the pinnacle of that descending triangle. So I think that the lack of volume that we're seeing in silver right now does fit the criteria for seeing that descending triangle formation play out over the next couple of weeks here, but we'll keep an eye on that one. I think that is all we got for today. Anything else you'd like to add before we wrap things up, CJ?
I just want to say how nice it is to see some familiar faces back in the chat, and always appreciate you guys' participation. But yeah, if you guys want a 2-week free trial to the community, we're publishing a lot more content, a lot more research reports, as well as kind of just our weekly updated report in terms of positions and macro outlook. But if that's something that you'd like to check out for 2 weeks for free, scan the QR code at the bottom of the screen, and we'll see you guys again soon.
Yep. Thanks for watching, everyone. Have a great day and take care.